Welcome, ladies and gentlemen, to another episode of Rise Urban Nation. It's your host, Taryell Simmons, in the building. And I got a very special guest, and I'm gonna ask this special guest to answer a lot of questions around profitability in our businesses, and you know, because they are just a professional when it comes to everything CFO or finances. I know they can help us out with this. So without further ado, ladies and gentlemen, we got Susanne Mariga in the building. Did I put the right emphasis on the Mariga?
Oh, it sounds better than I would have said it, actually.
Now, for those who are not familiar with you, can you briefly introduce yourself and this wonderful organization that you're part of, the Mariga Group, and tell us about your mission to the audience so they can really get acquainted.
Absolutely. So, I'm a CPA by background, so certified public accountant, and I provide fractional CFO services to 7, 8 figure entrepreneurs. And we specialize in high net worth tax strategies, particularly using the profit first method. And Taryell will talk about what that means later on. But really, like most people, they go to their accountant, they tell them to go out and buy a big truck at the end of the year to drive down their taxes. We never tell you that. Instead, we look at how do we build your net worth while still reducing your taxes. Maybe it's trying to fund a 401k, but not quite a regular 401k. Maybe we need to add some pension properties in there where we can write off maybe a couple 100,000 a year. And so that's what we do from that standpoint.
Yeah.
I'm also an
So
author.
you're an author too? Oh my goodness. So is there anything that you don't do?
I think the best lessons of life are learned by trying different things. So I am not too good to turn any opportunity, to explore an opportunity.
I love that. I love that. All right. So now I want to go back to what you said about fractional CFO. Like, that's the first time I've ever heard of this term. What exactly is a fractional CFO?
So companies have different needs depending on where they're at in terms of their growth stage, their scalability, ultimately what their end goals are, right? When you first start your business, you're probably perfectly well off with a good accounting firm, a good bookkeeper, someone to prepare your taxes. But once you're in that 7 and 8 figures, that multi 7 figures, and you're scaling rapidly, you really just need a different set of expertise. You're too big to potentially to be outsourcing your accounting, especially if you're in a complex organization that may do construction or manufacturing, or you've got multi-location retail. And so at that time, it may be time to bring that accounting function in house, right? You're not outsourcing to a bookkeeper. You're hiring your accountant. You're looking for strategists. You're looking to understand your numbers. You're looking to build out accounting systems, right? That give you real
Mhm.
time information. Or you're looking to go public, right? You've gotten to that point that you're ready to do an IPO, initial public offering. And so at that time, that's where you would bring in a fractional CFO.
Okay. All right. That's smart. I'm assuming this also what inspired your mission, which is the to eradicate entrepreneurship poverty. Now, tell me about that. Like, what inspired the mission to eradicate entrepreneur poverty?
So it's interesting because, for 16 years, I had a traditional accounting and tax firm. We did a lot of tax returns, we did a lot of bookkeeping. And, I recently sold the firm, and I always tell people I retired at the age of 46. So I get to do what I love now. And I loved it. I loved the traditional accounting firm when I had that. But, one of the things that kind of struck me was when I first started my business, I had these entrepreneurs and they would come to me and like they would bring their shoe boxes once a year, and their emphasis would be on, whatever you do, I don't want to pay taxes. And I would unfold these P&Ls and I would be looking at the bottom line. I'm like, well, don't worry, you're not paying taxes because you didn't make any money. And it was
Mm.
interesting because the first year, I felt like I was doing a good job. They were getting earned income credit. They thought that I was a pretty swell accountant. And, but then I noticed year after year, they were doing the same thing. And
Mhm.
as you get to know your clients, you start to see, hey, they work pretty hard. They're up until 11 o'clock at night. They're sending you emails. They've got payroll. They're onboarding people. And they're not paying themselves. They're not giving they're not even on payroll. And, and then it's like, okay, well, I plan to retire one day. How are you going to retire becomes the question. And so really my passion sprung from, I think sometimes as entrepreneurs, we get into businesses because we absolutely love what we do. We have a passion for what we do. We have a gift for what we do. And we love what we do so much that we want to give it away, and we would give it away for free just so we can do more of
Mm-hmm.
it. And really, what I like is, we do something called the profit first method. It was a method that was actually created by Mike Michalowicz. And what it does is it intentionalizes profitability, right? And so we do it kind of like Dave Ramsey has envelopes. In Profit
Mm-hmm.
First, we have bank accounts. We don't want any entrepreneurs having envelopes. And what happens is money is accumulated in one account we call the income account. And then twice a month, we allocate to different bank accounts based on their purpose. So we have a bank account just for profit. We're
Mm-hmm.
allocating a set percentage of our revenue into the profit account. So we're creating intentional profitability day one. We are also allocating something called owner's pay. And it's so important as owners that we pay ourselves because, I ask owners, I'm like, who's your most valued player? And they'll say, oh, it's Mike, it's Jane, but they'll never say themselves. They're like, if Mike and Jane walk out, I'm gone. I'm like, well, imagine what happens if you walk out. And
Mm-hmm.
just like you would not pay your MVP or skip paying your MVP, you should not skip paying yourself. Right. We also set aside for taxes because reality is if you're driving the great car, and you're getting the Escalade, reality is you're probably profitable. And I don't want anybody going, how am I going to pay for last year's taxes with this year's money, right? So we're going to put away tax money as we go along. Now we're going to use some sound tax strategy, but we're going to put it away. And then the last thing we're going to fund is our operating expense account. So whatever is left over goes into operating expenses. And just like Dave Ramsey's envelope system, when you look at that bank account for operating expenses, that's all you have to spend. And so you're going to be
Mm-hmm.
creating, I always call the illusion of scarcity. It's kind of like the going to Golden Corral. If you go to Golden Corral and they have like rows and rows of plates and smorgasbord, you're going to eat a whole lot differently than Taryell if you and I go out to a hors d'oeuvre dinner, right? We're going to be using small plates and we're probably going to leave more proud of ourselves than having the smorgasbord dinner. And that's the way it is with Profit First. We're creating an illusion of scarcity. We're creating a small plate. And so now we have to make very intentional decisions about what expenses we're going to commit to.
Oh, I love that whole system. Is that the system that you speak about in the book
That's a
that you
system that I
mentioned?
talk about, Profit First for Minority Business Enterprises.
Right. And give the folks the name of the book again, in case they missed it the first time.
Absolutely. It's called Profit First for Minority Business Enterprises by Susanne Mariga. And you can get that anywhere that books are sold, Barnes & Nobles, Amazon, any place that books are sold, you can get a copy of that book.
Yeah, and then we'll dive a little bit more into that book a little bit later. But one thing that from us talking and we had a brief conversation before we even came on. I'm up here thinking about like, why do you think businesses, especially I feel like especially in our community, business owners, despite working the hardest, often end up being the least paid? Why do we forget to pay ourselves first, or why don't we pay ourselves first? Is it a mindset thing, or is we're not taught this business structure at some point in us starting that passionate entrepreneurial business?
So a lot of it is we don't know what we don't know, right? We don't know
Hmm.
what we don't know. Part of it is how we're biologically and psychologically built. Just like with the buffet, right? It's something called Parkinson's law. That's supply and demand. The more there is of something, the more that we feel like we have to spend, right? If
Hmm.
I have a bank account, all my money is going into that one bank account, and I'm allowed to spend from that bank account. Well, guess what? If I just got paid, I can afford that new computer, right? Now I'm going to be worried when payroll comes around, but today I can afford that computer, right? Just because the money is there. There's also a problem from how we're trained in school, how we're wired. We were taught when I was going through my college degree in accounting, revenue minus expenses equals profit. That was generally accepted accounting principles. And the
Hmm.
problem with that is we're teaching our entrepreneurs focus on revenue, focus on sales, drop your prices, find out what your competitors are charging, right? And whatever you do, get the sale, don't get the no, right? And
Mm,
then expenses, pay your expenses. Dun and Bradstreet's calling you every month, so you got to make sure Dun and Bradstreet is happy. So you got to keep your credit up. And then the last thing that we think is, oh well, profit will be a natural byproduct of if we just sell a whole lot and we're responsible about our expenses. But the reality is, when we don't focus on profit, when we don't make profit intentional, then you don't really
mm,
get profit. In fact, the Bureau of Labor and Statistics tells you that really 20% of businesses close in the first year. And then after
mhm.
10 years, only 35% are left standing.
Yeah, and this is kind of a traditional approach, as you mentioned, and I know you learned it in school, and I think you talk about this a little bit in the book. 'Cause I think I saw a little write up about that, how in traditional business school teachings, why that it's or revenue equals expenses minus profit, but why is the revenue take away expenses equals profit model so widely accepted? If now that you know what you know, why do you think it's so widely accepted?
Well, it is a great equation, right? That's a true accounting equation. It's generally accepted accounting practices. It's a good thing, like when you're monitoring your financial statements. But I think the key is there's a difference between an accounting method and a cash management method. What
Mm,
entrepreneurs don't have is a cash management method. They have an accounting method, right? They hire a bookkeeper, they hire a CPA to do their accounting and do their taxes, but they're missing a methodology of how do I produce the results that I want, right? And that's where profit first becomes important, because you're now
mhm,
physically creating profit. You're physically moving money that from revenue straight into that profit account, so that you're literally profitable day one versus finding out what's left over at the end of the month or the end of the year.
Now, how does this the profit first approach um make somebody more successful in their, or well, I can't say make, but when you take a look at it, what's the the main key differences from the traditional business models?
So the traditional model focuses on sales, right? I actually had a conversation with an entrepreneur last week, and he was like, I just need to sell more. And I had to smile because I'm like, well, if you've got like negative margins, even if you sell more, that just gives you more negative, right?
Mhm,
If you keep adding negative plus negative, that doesn't equal positive.
mm,
And so creating profitability, creating a method to get to those results, right? It makes sure it ensures that you have positive margins in order to create that profitability.
mm. Now, something else that you mentioned earlier in the podcast, you talked a little bit about profit being intentional. Can you explain what you mean by making profit intentional?
Right. So, it's kind of like, you know, setting your intentions, right? If you don't have a goal, it's hard to create an outcome. And so what's happening in Profit First is we're generating an outcome, right? We're figuring out, what is my end goal? For example, if I want to be a small mom and pop shop, and I just want to have an impact in my community, my strategy is going to be a whole lot different than if I want to be a national company with multiple locations. I want a franchise and I want to be in the multi-millions, right? A whole different strategy. So it's important to really figure out, first of all, what is the thing that makes me happy? What lights me up at the end of the day? Where do I want to be at? Do I want to retire at 46, right? And
Hmm.
how do I create that outcome? And then you just build the steps to create the outcome.
Is that kind of what you did? Because I know you retired at 46. What did it start off like that, or did it start off, the traditional route of being passionate about? Well, first of all, were you passionate about being the CFO? Because I don't know too many people who come out of high school and is like, I want to be a CFO. Like, how did that whole trajectory start?
When I came out of college, I I just wanted to be a good accountant.
Uh-huh.
I went to work for Anderson in Chicago, which was their number one flagship headquarters, and I wanted to be a partner at Anderson. And, obviously Anderson that didn't turn out. Our friendly folks in Houston, with Enron, I think a lot of people know that story.
Mm,
And I ended up going to another public accounting firm. I ended up becoming an audit manager. And it was interesting because I had my daughter about 16 years ago. And at the time, I was responsible for the Toronto operations of this corporation that I was in. And I was flying back and forth from Houston to Toronto. I remember it was like a 3-hour flight, 4-hour flight. And I was like, oh, I'm going to get a lot of books read during this time. And I remember like being probably about 7 months pregnant. And I wasn't like one of those pointy pregnant. I was very wide pregnant. And I remember like I would fight for these chairs that are like the seat, they're like propeller jets almost. They have like the one aisle and then they have with the one seat and then they have the other side with two seats. And I would always fight for the one seat on the row. And I remember like sitting in the chair and then the airplane attendant was like, you need to put the armrest down. And I couldn't get the armrest down because my belly was there. And I think it hit me at that time that my life was really, really about the change. And
Mm.
that's where, when I had my daughter, I remember like looking at daycares, interviewing different daycares. And I was like, you know what? I can't leave her. I can't leave her in daycare because I feel like I won't get to see her growing up. And that was the start of, our accounting firm, Mariga CPA at the time. And, and I realized as I was working in the firm that, our entrepreneurs, they just needed a different level of help. We were great as tax preparers. We were great at bookkeeping, but reality is they needed someone to sit down and help them understand what those numbers are really telling them. And that's how I got into the fractional CFO side.
Nice. Now, and I'm assuming that's how this whole profit first implementation started to really come and take shape and form. And when you think about that, when you think about that journey, like how is the profit first implementation program tailored to those individual businesses that you've grown to work with and support throughout those years? And what are some of the good lessons that you learned along the way in supporting those businesses?
So, every implementation is different. So, like, your implementation is going to be different than mine, which is going to be different than the next person that we're going to meet. And so, understanding that it's not a one shot fits all. Now, everybody can do profit first, but your decisions are going to be different than my decisions. And so, it's really, first of all, starting with the why, starting with what's important, what's the outcome we actually want to achieve. And then it's going to be a combination of things. It's going to be a combination of how we're pricing, looking at optimal pricing, figuring out what break even is, because some businesses should not be in business, right? If they can't even meet break even or make it in time that they don't run out of their initial startup costs, right? It's going to be the initial seed money funding. It's going to be important. Um, then it's optimizing expenses, making sure what can we cut, and making a game out of it. Do I have magazines that I'm not using anymore? I remember we were all working from home during COVID and we were paying all this money for rent. And, I came in on a Saturday. I was like, look at all these magazines stacked out. They are still continuing to come, even though nobody sits in the lobby anymore. And what am I using or what am I paying for that I'm not using? And so really honing in on that, looking at team ratio. Do I have too many team members for what the revenue is that I'm generating? Do I have an efficiency problem in my team? Is it a time to have some critical conversations with people about upping their production game, right? And
Mhm.
so every company is going to be a little bit different in terms of what they're going to need.
So I love that it's a tailored approach too, because I think everybody needs something different because everybody's on a different journey in their business journey. And hopefully in those conversations, they get to know the outcome of what they want. I think so many times we get stuck, especially entrepreneurs that I know that come from my neighborhoods, we get so stuck in just the everyday running of the business that we don't long-term plan for what we really want the business to do or where we want to be in our business or how to retire from the business or sell the business if that's what we want to do later on down the life. And so I love that you take that tailored approach. Now I consider you at the mastery level to this. So since you are a certified profit first professional at the mastery level, what key insights have you gained from your numerous implementations?
Well, I think the biggest key insight is we never arrive. And what I mean
Mm.
is, yes, we may hit what we call our target allocation percentages. And by the way, Terrell, what I'll do is I'll give you a link so that your audience can download it. And what that is, based upon our studies of what a healthy company looks like, those are the percentages that we expect to see in terms of profit, owners pay tax and operating expenses. So what part of your revenue should be going to each of those categories? And you may reach those percentages, things shift, right? Things all
Mm-hmm.
shift. Right now, I think one of the things that we're seeing is a lot of inflation, right? I think it was 3.7%, right, in September.
Mm-hmm.
And so if you're still charging the same amount that you did 3 months ago and your cost of goods sold has risen 4%, your profit just dropped 4%, right? And
Mm.
so constantly, creating systems in place where you're able to detect when that's happening and then you adjust accordingly. Right now, the invention of AI has happened, right?
Mm-hmm.
Just even 2023, we've made huge strides at that. People that did copywriting are suddenly like, ooh, or, well, what am I going to do now? Because ChatGPT does a little pretty good job of it. And so there's that need to constantly reinventing yourself, right? How do I complement ChatGPT so that it becomes a necessity to use me versus ChatGPT? I know in our industry, the accounting industry, it's, a lot of us get into it because, we're introverted, we can just crunch
Mm-hmm.
numbers all day. Guess what? We're getting to the point that a computer is going to be able to do it better, right? And so, where do we need to be at? We need to be in areas where we're fixing the things that are
Mm-hmm.
broken, right? It's garbage in, garbage out when it comes to numbers, right? And how do we recognize when things are broken? How do we fix it? How do we program it? How do we stay ahead? And we're the ones that become inventors. I had a great conversation. I love my kids, and a couple of years ago, I took them to Sam's Club, and I asked him. I said, what's different about Sam's Club that's different than what it was a few months ago? And I had them pinpoint what it is. And they're like, "Oh, we now self checkout. There's only 2 places that have a person that ring you up." And I'm like, "So what does that mean?" And they're like, "It means we need to think about our future." I said, "Well, what kind of jobs are going to be there in the future?" And I sat there and thought about it. And I'm like, one, security, right? Somebody that's going to be bold enough to confront when things are going wrong. Sam's Club checks that receipt, make sure that you actually paid for it, right? Security. Nobody wants to do that job or carry the gun, right? Stalkers,
Mm-hmm.
right, are going to be important. People that are going to physically get up there and restock, that manual labor. And then the next thing is the inventors of IT and innovation and people
Mm-hmm.
that fix the innovation when it breaks.
Yeah. And which side do you want to be on? Because I guarantee you there's one side that's a little bit more lucrative than the other side, right?
Oh, yeah, definitely.
um, Now, I'm glad you brought up the whole evolution of AI and chat GPT and what that looks like in the conversation. I mean, when you look at AI in your particular business, do you see AI, really changing the landscape of a fractional CFO or the tools that fractional CFOs use?
I think that from an AI standpoint, I think it's going to increase automation, is where I think we're
Mm,
going to see the changes. Maybe give you some very high level type of analytics, but it's not going to give you the creativity. So the numbers are screaming this. What does this mean? How do we pivot? Is this an industry
mhm,
that's dying? And how do we make it a industry where people need us, right? How do we shift that and guiding our clients more through that transition? Or how do we help our clients having that crucial conversation? Now that we've gone on more automation, maybe we don't need as many people. How do we break those conversations and still retool people for their next venture,
mhm.
even if it's not with us?
Yeah, that's what I always tell people. It's all about retooling. Just like the copywriter that you example you mentioned, it's going to be them retooling how do they do the job, or look at another fraction of what is needed in industry, and how their job gets retooled in that whole process. And then speaking of copyright, let's go back into this book because for those who are unfamiliar, can you give like a brief overview of the Profit First book that you did with Mike? How do you pronounce Mike's last name again?
Mike McAllowitz, amazing
Makalowitz.
guy,
Sorry.
amazing guy. So my book does talk about profit first. So you're definitely going to get a nice, good cup of coffee with profit first. But what's different is that we cater it more towards minority business enterprises, and minority business enterprises. It's a certification that we get if we're 51% owned by a person of color, right? An ethnic
Mm.
minority. And there are some challenges that we have. One is, we have opportunities for government contracting. But the reality is not every contract is a good contract. In fact, there's more power in learning when to say no. Because, one of the things about government contract is there's something called request for proposal, right? And that can mean it's a race towards zero, right? Because at the end of the day, the one that wins is the best value, which is usually the best cost, right? And maybe we don't want to be in that. And so it's important to know, when do I walk away? When do I say yes? How do I know this contract is going to produce profit? And we teach you how to calculate that in there. The other thing is, it tells you just some, I call them, like, we spill the tea a little bit. Some of the best contracts are going to be your sole source contracts. And what we're talking
Mm.
about again is you're not commoditized. We're talking about problem solvers. So if you're in an industry like cleaning, right, where there's a lot of competition, that's going to be a race towards bottom, right? Potentially with that. And so when we get into sole source, like, maybe you're the only one that has a specific skill set or know how to use a specific program. Maybe
Mm.
you wrote the program that they're using, right? And so how do I become closer to sole source becomes really important. I also talk about tax strategy. For you guys that are going to your accountant trying to buy a truck every year, that's not going to work after a while.
Mhm.
And so how do we decrease taxes while not increasing expenses, right? I think I may have talked about it earlier, like an option of, one of the best ways is if you're a closely held company where it's just maybe you and a spouse, maybe doing a solo 401k, right? That's going to allow you to put away about $46,000 a year into that 401k. You
Mm.
and your spouse, that's almost $100,000 that you're writing off. You can get into pensions with that also. And how do I create those opportunities to save on taxes while at the same time really increasing my net worth is what I talk about in the book. So, and plus I give some tidbits from my own experience as an MBE.
I love that. I love that. You made me rethink because, like sometimes you see those social media influencers talking about always go for the government contract. That's guaranteed money. That's money that never runs out. But I never really thought about looking at contracting in the way that you just kind of described it, like the race to the bottom, because of all these people competing for this one bid or this one contract that it could literally eat into profit margins, and you see yourself spending more time and your wheels on something, even though it's guaranteed money. Like how much profit are you truly making, right? Once you get selected for that, right? Which leads to your book, Profit First. It's a whole big pun around your book here. I see where you're going with this.
Yeah, I've seen $50 million companies that have government contracts run at $1 million losses. So it's a
Wow.
very realistic outcome if you do not know what you're doing as you get into it.
Uh, You know, would you say, because I've heard this term before too, of like speaking with your accountant, like I don't know if it's in Q1, but at the beginning of the year, just to kind of talk about what the whole goal and strategies are for your business, and like pre-build in your tax plan along with the business plan. Is that a best practices that you subscribe to, or what would be your advice around that?
So I meet my clients a couple times a month, actually.
Okay.
So even more than that, I mean, and we're doing things like reviewing their budget, modifying their budget, because things can change even within a month, right? If you
Hmm.
get a significant contract or you lose a significant contract, right? All those things can impact you pretty swiftly. But I would say for most businesses that are starting off, at least quarterly, you want to meet with your accountant quarterly. And if your accountant's not willing to meet with you, that's probably not the right accountant for you. So,
Mm.
and during that meeting, you're going to be looking at how are you doing financially. You're going to be doing estimates on your taxes. You're going to be doing some tax planning with that. But I would say at minimum a quarter, every quarter, if you're an entrepreneur.
Every quarter.
And if
All
you're a
right, you
bigger
hear that,
business,
entrepreneurs? Every quarter, you should be meeting with your accountant, and if you not, I happen to know a good one right here. um, so can you share, some success stories of businesses that have achieved record-breaking profits through your program?
Oh yeah, our website is full of them. If you go to SusanneMariga.com and our Work With Us page, we actually have our clients, that are talking about their experience. We've had clients that have gone out and bought their building, which by the way has some really great tax write-offs too with that. We've
But
had
buildings, buying
clients,
buildings?
yeah, we've had clients that live in Atlanta and went out and bought a farm. I was like,
What?
"Whoa." Went out and bought a farm. How amazing. We've had clients that have gone on, sold their businesses. We've had clients that have become millionaires. It's profit first. It's what happens when you create an intentional outcome. You get intentional
Mm,
results.
yeah, I love that. I love that. You're gonna probably inspire a whole bunch of entrepreneurs and business owners and listeners listening to this. What's the first step you recommend to an entrepreneur who's inspired by the profit first approach?
So the first thing I would recommend is go to our website, profitmap.co, and get the free download of the profit map of what does it look like in terms of transfers, in terms of what a healthy company looks like. And don't get overwhelmed. Start small. Start with 1%. Start with 1%, shifting 1% of your revenue into profit. And then every quarter, just build it from there. Just build an extra percent in there and until you reach those target allocation percentages.
Mm. Now, I also heard people say that you should pay yourself a certain amount of salary right off the top. Is there a ideal percentage of salary that you should be paying yourself each year in your business?
So what we do with our clients is we do something called a reasonable compensation study. And
Mm,
and what that is, we have them take an assessment of how they spend their day. And, if you're spending your time, doing admin work versus CEO work, admin work has a different billable hour, right, than a CEO work. And so what we're doing is we're allocating based upon their time to create a reasonable salary based upon what their actual duties are. So every salary is going to be different because it's based upon your actual duties from that standpoint. But
mm.
yes, everybody should be paying themselves an owner's pay.
Yes. Pay yourself first, profit first, whenever you can. Now, I don't like to do the long Joe Rogan type of podcast because it's just not my type of podcast. So let's wrap it up like this. Where can our listeners get like the first two chapters of Profit First, or buy the book or audio, and then what are you currently working on, and where can they connect with you?
So the best way to, I don't have a free chapter, but definitely Amazon 21.95 was a great deal. I do have a free profit map. So if you go to profitmap.co, you can download the free profit map and the free allocation tool, which will give you quite a great place to start with that. But the best place to reach out to me would be to go to SusanneMariga.com or marigagroup.com and you'll be able to learn more about me and what I do.
Well, thank you for coming on and blessing our listeners. Thank you for making this book, because I think this book is going to be so beneficial to a lot of our entrepreneurs and people who are currently even in business that haven't had this structure before. And it's something that we definitely need to talk about more in our community. Susanne, you've been the best. I hope I could get you back on here sometime again to answer any questions that my audience brings to me and drop more knowledge that you've dropped today. We appreciate you and we salute you for coming through just to create this space for us.
Well, it's been an honor to be here with you, and I'd be more than happy to come back.
Thank you. And that is our show for today, ladies and gentlemen. Don't worry, I'm going to get all the show notes, the links from her, and I'm going to drop it in the bottom. So if you're driving, don't worry if you wasn't able to catch those notes. We'll have them for you. I'm going to make sure I get that for you, that information, so that you can connect directly with our guest.